Bursa Malaysia Derivatives Berhad is a wholly owned subsidiary of Bursa Malaysia Berhad. At Bursa Malaysia Derivatives, we provide a wide range of derivatives products tradable globally via the CME Globex trading platform. Among our equity and financial derivatives, we offer the FKLI, which enables traders to gain leveraged exposure to the local equity market. Of all our products, we are best known globally for our crude palm oil futures. Our FCPO has maintained its position as the global price benchmark and reference point for the international oil and fats industry for over 40 years. As pioneers of palm oil futures and options in Malaysia's earliest commodities exchange platforms, we have for decades developed an in-depth understanding of the value of our palm complex offerings in every respect. Every detail along the supply chain, from cultivation to trading to hedging, no one knows the palm complex like we do. This is where Bursa Malaysia Derivatives offers unparalleled expertise. Our comprehensive array of products, partnerships and platforms connect Bursa Malaysia Derivatives to traders and investors all over the world. Find out more by contacting one of our licensed futures brokers or visit www.bursamalaysia.com.
We would like to wish everyone a very good morning and warm welcome to our listing gallery located in Bukit Kewangan, aka Exchange Square. Welcome to today's prize presentation ceremony for the Derivatives Virtual Trading Challenge 2022.
I would say that the competition is actually one of the best that we participated, and I hope there will be a lot of competitions organized by Bursa to educate a lot of young students or young people about the investing and also trading.
In this virtual challenge, the fundamentals is easy. Buy low, sell high, buy low, And I would encourage people to join DVTC if you are, new in this trading, and you want to explore and, to test out. I think this is a good platform to start off with.
So the key takeaways from this challenge is that I gained more confidence in trading. Definitely there's a lot of mistakes made, but I generally will know what will happen in the real market.
So our winning strategy is from the technical analysis we did earlier. So we usually make decisions based on the trends and everything.
With that, let us commence with the highlight of the day. Our prize giving ceremony will start. Can I please have Dato' Omar to the stage once again to present the prizes?
Maybe one takeaway, for myself, I would like to share with the people outside, discipline is key. If you want to make it, you need to make certain decisions which are bold. So if you are sure about the position that you are taking, just go for it.
We strongly encourage you to join this year's challenge to help you to gain confidence in future trading and also learn how to trade and earn profit consistently.
Hello everybody, welcome to this webinar brought to you by Bursa Malaysia Derivatives and managed by our company LifeChamp. Today our webinar's title is Capitalize the Opportunities in Derivative Market with FCPO Trading. This webinar is also brought to you in collaboration with Affin Huang Investment Bank. So my name is Shin Chu, I'm the moderator for this session. Now, derivative market is a very dynamic market. In Bursa Malaysia Derivatives, there are a lot of futures, a variety of futures contract that are available for you to do trading. In particular, today we're going to look into FCPO, which is the futures in crude palm oil. Our FCPO is the world's benchmark when it comes to the crude palm oil contracts. So today Our speakers will share with you how do you capitalize on the opportunities in the derivative market with FCPO trading. So we have two speakers today who are Mr. Bong Jinhao and also Ms. Yong Ko Lee. Before we begin the session, here's a disclaimer. Whatever we share in this session is only for educational purpose. There's no way that I give any recommendation for you to buy or sell any listed derivative that we mentioned here. If you decide to make any investment or trading decisions, you're 100% responsible for all your trading risk. Allow me to introduce our speaker today, and he will be the first speaker. He is a position trader in the capital market focused on stocks and futures. He's the founder and chief master trainer of Street Finance. He has his own signature program, which is Street Trader Intensive program, allowing individuals to trade without monitoring and speculating in the market. It is featured in Britishpedia Biography Encyclopedia Successful People in Malaysia, the 3rd edition. It is also featured in media such as City Plus FM, Borneo Post, and Sinchu. He often speaks for Bursa Malaysia and other investment banks, and also is a frequent speaker in universities and colleges. So he is none other than Mr. Jin Hao. So Jin Hao, how are you today?
Hello, hi Shane, how are you?
I am fine, and you?
Okay, so should I share my screen
Yes,
now
go ahead.
already? Wait, let me just figure out how can I share.
Good to have you here back with us in this segment.
Yeah, it has. I think this is the first futures section
in this year.
Yeah, okay, because not really that active in speaking anymore this year.
So we're lucky to have you today. Right. Can see your screen now.
Okay, can already. Full screen, right?
Yes, perfect.
All right, thank you very much. Okay, so I'll have an hour time to share with you guys. All right, so hi everyone. First of all, I'd like to express my gratitude to Shan and the team over at with Shan and also Bursa Malaysia for having me here today and share with you how can you capitalize the opportunities in derivatives market, specifically with FCPO trading. Of course, I'll share a little bit about what is futures and why you should be looking into if you're trading stocks, why you can actually look into futures trading as well. All right. So again, disclaimer as usual, educational purposes only. And just now, Shane has already introduced me, so I'll just skip this part. All right. So here will be the content outline, okay, things that I want to share with you tonight. Now, before that, can you guys type in the chat? Okay. Now, if you have traded futures before and you are actively trading futures, you type 1. Okay, type 1. Now, if you traded before on and off, you traded like once a while, then you type 0. Okay, meaning that you traded before, but occasionally you trade only, it's not like very often. Now, if this is the first time, okay, if this is the first time you get into knowing what is futures, okay, can you please type 6? Okay, 1 if you frequently trade futures, 0 if you occasionally trade futures, okay, on and off, okay, 6 if this is the first time you want to learn about futures. All right, so I can see from the chat, okay, thanks for the response, okay, I can see from the chat that most people are either, at the fence, okay, sometimes yes, sometimes no, don't trade, okay, but a lot of you are quite new to futures trading. All right, so that would be great because the first thing that you're going to know is how can you kickstart futures in Bursa Malaysia. Okay, and why? I'm going to give you a few reasons why you should be looking into futures despite you are already great in trading, stocks. Okay, now we all know that stock market right now is kind of boring. Okay, it's not that stock is not good. I trade stocks as well. Okay, and sometimes they can be like very seasonal. Okay, now, and why specifically I like FCPO? Now, FCPO is a product that I'm very proud of as a Malaysian. Okay, I'm very proud of FCPO as a Malaysian. All right, so it's a really great futures product to trade. And I'm going to share with you how can you position trade FCPO, and also how can you day trade FCPO for those who want to make a quick bucks or even participate in the competition. Okay, so now the first thing, let's get started. Okay, what are futures? Okay, so first, a futures market is where participants can buy and sell futures contracts. Now think of it like the stock market. The stock market is a supermarket of stocks, and the futures market is the supermarket of futures contracts. And a futures contract, okay, a futures contract is a standardized legal agreement to buy or sell an underlying assets. It can be commodities, it can be indices, okay, at a predetermined price at a specified time in the future. So there are a few clusters of information here. First, it is a standardized legal agreement. So inside that agreement, it is a standardized contract that it will tell you, okay, by buying, okay, going long into a contract, how many, for example, how many tons of crude palm oils you are, dealing with, okay, and then the next thing is it must have an underlying asset, okay, because futures is a derivatives. So derivatives comes from the word derive. So the value of the contract is derived from an underlying asset. That's why we call it a derivatives. Okay, so you got an underlying asset. Okay, it can be commodities, it can be indexes, it also can be shares. Okay, now at a predetermined price, and that's going to be the price that you're going to enter, go long or go short at a specified time in the future. Okay, now many information, but let me just cut short a little bit of the learning curve. Okay, a lot of things you can obtain many information from the brokers, but I still need to cover it. Okay, I want to spend more time later on the strategy part. Is that okay? If that's okay, can you please type okay? Okay, can you please type okay? Okay, I will go through what is futures first, and I'll just run through very quickly, and I'll spend more time to talk about strategies later. Okay, because time is very limited. Okay, so be very attentive. All right, so standardization of contract. Now, the first on your left, you can see that's what we call gold futures. Okay, FGLD. You can see that the contract code is FGLD. So what's the underlying instrument? So we all know that, okay, FGLD, oh, it's gold. So what gold? It has to be very specific, okay, when it comes to dealing with futures. So in this case, it's gold asset to a minimum of 995, finance or such other technical specification of gold underlying LBMA gold price AM. Okay, so you don't have to care because we are just trading, but there is a standardization contract behind it. And what's a contract multiplier for gold futures? It is 40 per contract unit. Later, I will show you how this number 40 comes into play. Now, the contract size is, the one contract times the multiplier. All right. And you have the minimum fluctuation and you have the contract months. Okay. Spot, next 3 calendar months, yada, yada, yada. Okay. And the trading hours is specified there as well. Okay. You have 9 a.m. to 12:30 in the afternoon. And then afternoon trading session will be 2:30 to 5:30. Okay. And then also you have after hours T+1 trading session from Monday to Thursday. And that's going to be 9, okay, until morning 2:30. Okay. So on your right, you can see that our famous FCPO, okay, and the underlying is crude palm oil. Contract size per contract, we are dealing with 25 metric tons, okay, and fluctuation minimum is 1 ringgit, okay, and contract months it's there, and trading hours 10:30 to 12:30 hours now, 12:30 p.m. Now this is very important because later on the day trading part, you gotta be very you're gonna know that, okay, when the FCPO market opens, because you're gonna trade the opening. Okay, so it opens at 10:30 a.m. our time for morning sessions, right? Afternoon sessions, okay, and the T+1 is there. Now, one thing that I want to share is at a practical level, okay, we always trade the 3rd month. Okay, as far as trading commodities future is concerned, we usually trade the 3rd month or the most active month. The most active month is usually the 3rd month. We refer to the 3rd month. And as far as charting tool is being concerned, okay, we also deal with the 3rd Okay, the third month is always the one that's most active. Okay, now, all these you can find in Bursa Malaysia website. Okay, you can go to bursamalaysia.com, go to derivatives section, and then you can find all the information. Now, I want to give you a few reasons why you should consider trading futures. Okay, the first is leverage. Okay, the first is leverage. Second is you can potentially profit from both directions, long or short, and you don't have to deal with IDSS. Okay, whereby you're forced to sell within a day. You have the options here. Now, the third one is great liquidity, okay, especially for FCPO. Second to that can be our, FKLI. Okay. Now, third, you have multiple order types. Okay, you can have market order, limit buy, or stop order, depending on the brokers that you are using. Usually, you're going to have these three options. Okay, and with the flexibility of having multiple order types, meaning that you can enter the market, okay, going long, and you can set your stop loss. You can set a stop loss there. So meaning that less emotion involved. There's still emotion involved, but less emotion involved because the stop loss there's a hard stop. You can put a hard stop. You can also put a hard TP by using limit sell or buy, depending on which direction you're taking. Okay, transaction cost can be generally lower as well. Okay, because it's calculated by contracts. Okay, now let me just share with you how can you position trade FGLD. So this is the price of gold trend. Okay, the trend of gold as of 2 weeks ago. Okay, now here what you can see is the liquidity wise, of course, it is, you see the chart. Okay, those who are not, if this is not the first time you see the chart, okay, then you know that the liquidity is kind of restricted here, but it is still doable, okay, tradable if you are position trade with the trend. Now, for example, here you have a rejection at the resistance. Now, if you want to see, you want to have a greater idea, okay, what's the chart, you can always use line chart, or you can go to look at the other charts for gold. Okay, you can use XAU USD, or you can look at other gold prices chart. Okay, it's pretty much the same, okay, across. So here you can see that there's a rejection at around 2060 actually, 2060, and then after that, you can see that there is a support become resistance. Okay, we call it switch of row. Okay, the previous support, the swing low, okay, becomes like a mini support. Okay, and then when it is being breakout, it can become resistance. This is what I call, in short, we call it SBR. Okay, for SBR. So what you can do is actually you can sell, let's say in this case, you can sell one contract of FGLD at 2025, and then you see that there's a strong daily support down there. Okay, you can refer to the chart. And then let's say you take profit at 1950. So how are you going to calculate the P&L here? Okay, how are you going to calculate the P&L here? Okay, so first you have the gross profit. Okay, it is 2025 minus 1950. Now this one is, it follows the US dollar value, okay, per troy ounce of gold. So 2025 minus 1950, assuming that you open a short at 2025, you close it at 1950, you're going to get a difference and then multiply it by 40. That's a contract multiplier. And then you get the number in terms of ringgit. Okay, in terms of ringgit. Now, there's also one thing that, okay, is what we call margin requirement. So this one, it changes from time to time. So always check with your broker. Your broker usually will send you the list. Okay, okay, you get the list of the latest margin requirement. Okay, now, the next thing, okay, let's talk about how can you position trade FCPO. Okay, how can you position trade FCPO, and how can you calculate how much profits or loss that you are dealing with. All right, so this is FCPO. Okay, so here you can see that it is a support becomes a resistance. Okay, you have a support. Okay, support becomes a resistance. Okay, so here is what I call second touch. You have a breakout here, okay, and then it goes back up to touch the resistance again without breaking out, going higher. It rejected here. Okay, of course you can go into lower time frame to get in a more precise manner. But let's say you're going to short trade. Okay, for example, you go short at 3789 with a stop loss here. Okay, and then you take profit at 3500. Okay, so how are you going to calculate the P&L? Okay, it's very simple. You get your entry price minus your in short lah. Okay, this one is for short trade. Long, you guys know how to calculate that because you know how you trade stocks. That's how you calculate everything in for long positions. So for short, your entry has to minus, okay, your exit, and then your times 25. The number, okay, is going to be in ringgit. Okay, just avoid confusion. Okay, maybe this is a mistake. Okay, I should put a bracket here. Okay, okay, the difference you have to multiply by 25, so it will be 7,225. Okay, 7,225. Now, how many of you so far you are clear up until here? Okay, you are clear up until here on how you calculate, okay, P&L for FCPO or FKL or FGLD, especially FCPO. If you are clear and I can proceed, can you please type 6 in the chat box? Okay, type 6 in the chat box. Okay, type 6 in the chat box. All right, cool. Okay, so to make everything into the simplest manner, the difference in terms of the point, okay, you multiply by 25. Okay, the difference multiply by 25. Okay, so that's how you're gonna know. Okay, if you risk 10 points, they're gonna be per contract 250 ringgit. Okay, if you take profit 20 points, it's going to be 500 ringgit. All right, so now here's the thing. If you're into day trading, okay, if you're into day trading, FGLD and FKLI can be good, okay, when there's a good uptrend or downtrend. Okay, now, but here's the thing, okay, oh, sorry, FGLD, okay, FGLD and FKLI can be good when there is good uptrend or downtrend, but we all know that FKLI sometimes the stock market don't move a lot every day. Sometimes it's like sideways, and it is rare for our FKLI to move more than 20 points per day. Okay, and FGLD is only stable when there is a very obvious trend. Like now, for the past 1 or 2 weeks, gold is kind of like a little bit sideways. Okay, then holding a contract can be, quote unquote, waste of time because there is no trend. Now, and also if you're going to intraday FKLI, because I realized that a lot of traders, when they come from a stock market, okay, they traded stocks before. You talk about Maybank, Public Bank, Top Glove, they know. Okay, they traded stocks before. And the first instinct when it comes to trading futures, they want to trade the FKLI. But here's the thing. If you're into day trading, okay, understand that it is quite rare for FKLI to move more than 20 points a day. Okay, if you traded stocks before, then you know that it's not every day our stock market move a lot. Okay, sometimes it can be like 1 point. Okay, all right. So here's the thing that you need to know. It is very normal for FCPO to carry more than 50 points or 50 ticks of movement in a day. It can be 60, 80, 100, totally normal. Okay, so here's the thing. Okay, okay, let me just go through first. Okay, FGLD might have huge movement, but the intraday liquidity, okay, is not that great or ideal for day trading. So as far as FCPO is concerned, here's the thing. There is a gap almost every single day, just like FGLD. Okay, so a lot of times people tell me that, okay, they don't dare to position trade FCPO because of the gaps. Okay, because of the gaps. Now, let me share with you how the gaps looks like. Okay, let me share with you how the gaps looks like. All right. This is a daily chart. Okay. Now, if you look at the gaps, okay, if you look at the gaps, this might not look a lot. Okay, this might not seems a lot, but if you really go and measure it from here to here, it gaps up by 31 points. 31 times 25, that's a lot per contract. Okay. So let's say if you make a decision that is not that great, okay, you sell before the market close. The next day it gaps up 31 points. That's going to be very painful. Okay. That's going to be very painful. So, and it's a lot. And how about this? The gaps here. Okay. The gaps here. Okay. This 82 points of gaps. Gaps alone is 82 points. So FCPO per sessions moving 50, 60, or even 100 points is totally normal. Okay. So what you are seeing is daily chart. Okay. One candles equals to a day. Right. One candles equals to a day. Okay. So, however, wait. FCPO provide more intraday volatility to trade. Okay, you can see that the comparison of the gaps and the candle size, you know that it moves really a lot. Okay, I would say 50 points for FCPO is a bare minimum for the movement. If FCPO were to move less than 50 ticks a day, it's going to be a disastrous day for intraday trader. Okay, so in this regard, okay, FCPO provides more intraday volatility and also at the same time liquidity for us to trade. Okay, and because of this, conveniently, intraday trading will avoid gaps. Okay, will avoid gaps. Okay, so how many of you think that, okay, gaps, okay, holding overnight is very, scary? If it is scary, can you please type yes in the chat box? Okay, it always scares you. Okay, especially for those who are in the market. How many of you are afraid of the gaps in the futures market? If yes, then type yes. Okay, now it is true that, okay, it is very scary. Okay, but of course, if you position trade FCPO, you can also make a lot of money. The thing is, understand that there is a gaps, okay, and it happens always, okay, on daily basis. You need to put a lot more buffer. Okay, when we position trade FCPO, the buffer has to be like 250 ticks, 300 pips. Okay, so you need to have a lot of buffer, or else you get margin call very quickly. Okay, so here's the thing. Okay, if you think that you want to trade FCPO, oh sorry, you want to do day trading, I just give you my very personal opinion and also speaking from experience. Okay, I trade stocks. I'm not afraid to tell you that I trade more stocks than futures. Okay, but here is one fact. For day trading, FCPO is the way to go. Okay, I can day trade FCPO. But for stocks, yes, I might trade in terms of value. Okay, the money I put into the stock market can be more than the money I put in FCPO, primarily because of a few reasons. First, FCPO, we are dealing with leverage. I don't need a lot of capital anyway. I just need to know that what's my risk reward, okay? And usually how much I want to put in to have enough buffer for what I want to trade, the style that I'm trading. Okay. Second, because you just don't need that much what you call time effort, okay, to trade stocks per se, because I don't dare trade stocks. I just don't think that it is a good instrument to day trade because volumes can dry up. Now, I know that contract can be very interesting things, but I just feel that FCPO is the one that I always go after when it comes to day trading. I day trade stocks before, okay, and I trade FKLI, FCPO, and I think the FCPO is the best. You get the best liquidity, you have enough movement to make profit that you want. Okay, so here's the thing. Because of the volatility that you have, because of the liquidity that you get, okay, intraday, and because of the leverage that you get, okay, I think in contrast, okay, FCPO really sets a good environment for day traders. You don't have to worry that, oh, if I open a position now, later will the volume dries up? No such issue. Okay, so here's how you can get started with FCPO day trading. First, the required margin can be high for some people, okay, but depending on how you look at it. Okay, so the required margin for now, at the point of drafting this slide, is 9,000 ringgit per contract. Okay, 9,000 ringgit per contract. Now, 9,000, okay, if you buy stocks, you probably only buy like 2-3 counters at max. Okay, and if you want the stock to go up, you want to make 1,000 ringgit, the stock has to go up like 10, 11, 12%. Okay, and for FCPO, 1,000 per contract. Okay, you want to make 1,000 ringgit with one contract. All you need is to calculate lah, okay, around 40 points. Okay, so 40, yeah, 25. Yes. Okay, so stop loss is usually about 12 to 15 ticks for current market. Okay, so meaning that every stop loss can be 300 to 400 lah, okay, in terms of value. Okay, 375 sometimes, okay, because of the buy sell spread, you might want to get out, okay, whatever thing, okay, is 300 or 400 for easier math, okay, 300 or 400. Okay, so the first target profit, okay, is usually 1R. Now, what is R? R means risk multiple, 1 times of what you risk. Okay, so if you risk 12 ticks, you have to make sure that you make 12, 13, 14, 15 ticks to be to give you good risk reward ratio. So the first target profit is 1R, okay, which is just put it 12 to 15 ticks. Okay, second target is 20 to 30 ticks. So if you have the ability, okay, or if you're allowed to trade 2 contracts, meaning that your first contract, you can close it at 1R, and the second target, it's the second contract, you can close it at 2R or even higher, depending on where's the resistance or support. Okay, so as my background, okay, I'm a trend follower. Okay, so when it comes to stocks, I follow the trend. Okay, I can trade the whole trend. I hold for the whole trend, and I know that when a trend comes, a momentum comes, it can really go very far. Okay, now I would usually, okay, I will usually leave some contracts for trailing. Okay, trailing means, let's say I go long, okay, and as the price go higher, I move up my stop loss, move up, become a trailing stops. Okay, so meaning I follow the trend until it bends. Okay, so this is what I mean, okay, for trailing. So start slowly from 1 trade a day. Okay, from 1 trade a day. Now, the first opportunity will usually appear in the first half hour of trading. If you want me to be more exact, write this down. 10:35. Okay, 10:35 a.m. is where the first opportunity will start. Later you know why. Okay, later you know why. Okay, so guys, are you ready to learn the strategy? Okay, if you are ready, type ready. And I want you to promise one thing. Okay, I want you to promise me one thing. After this session, go and back test and see it for yourself, whether or not it works for you. Okay, I present you the strategy. Go home later, back test it. Okay, see whether it works. And also, don't waste this information. Okay, now All right, so I see you guys are ready. So there are two main setup to watch. Okay, there are two main setup to watch. The first is reversal. Okay, the second is momentum continuation. Okay, 10:35, it will be either one. Okay, it will be either one. So first, reversal. So reversal happens when the price touch back the opening price. Okay, when the price touch back the opening price. Okay, depending on whether it's a bullish candle or bearish candle, the opening price can be different. Okay, bullish candle, it is at the bottom of the body. Bearish candle is at top at the body of the body. Now, you go long at the opening price if the first 5-minute candle is a bearish candle. Okay. And you go short at the opening price if the first 5-minute candle is a bearish candle when it touch the opening price. All right. So let me just show you the example of reversal. Now, when I show you an example, I only show you in 5-minute charts, unless otherwise I state it. And it is 10:30. The first candle is 10:30 until 10:35. Okay. 10:34:59. Okay. So first candle, bullish candle. Okay. So next, opening price is here. This is an example. This was last time. Okay. Example, opening price is here. Okay. All right. That's the opening price. So what you do is basically you go short. Okay. So your entry comes in at the third candle here. Okay, at the third candle here. So it is after 10:40. Okay, so it is after 10:40. All right. So again, because this was last time when it is like 6,000, so the ticks value can be higher. We can 15, sometimes 20. So you can see that stop loss 15 ticks, and you can TP more than 30. Okay, you can also trail. Okay, so risk reward 1, 2. This is an example of reversal. Okay, now the next is, okay, let me go back. The next is what I call momentum continuation or trend continuation. So again, your reference is always the first 5-minute candle. Okay, if you are following me, type in the chat box 5-minute. Okay, 5-minute. Is there a demo that can backtest? Unfortunately, as far as what I know, the answer is no. Okay, you have to do manually. Whatever things I trade, I usually don't backtest with, software. Okay, if it's as easy as software, sometimes, okay, I don't know, okay, it can be too easy for everyone, for a lot of people. So as far as I know, it's tak ada lah. Okay, so your reference is always the first 5-minute candle. Now, so what is trend continuation or momentum continuation? When you see the second 5-minute candle continues the direction of the opening candle. Okay? Continue the direction of the opening candle. Okay? So you go long if the second candle breaks the first candle's high. You go short when the second candles break the first candle's low. Okay, so again, the strategy I share with you best works at morning session opening. Okay, morning session opening. All right, so let me go to momentum continuation. Okay, so this is the opening candle. Okay, opening candle. And then it goes below, then you go short. Okay, then you go short. Again, risk 1. This one is, of course, is good scenario whereby you can TP, take profit 30 pips, and you get risk reward of 1 to 2. All right, you get risk reward of 1 to 2. Okay, so is there any screen shared? Can you guys see the screen? If not, this is going to be a big issue. Okay.
Yes, we can see your
Right.
screen, Jinhao.
Okay, great. Okay. So how many of you are following me well? Can you please type 1 in the chat box? Type 1 in the chat box. Okay. All right. Okay. Now, meaning that, okay, you only got 2 scenario. Okay. You only got 2 scenario for every morning. Okay. Sometimes it can be very complicated, but let me just share with you. So for example, today, this one is 5-minute candle. The first 5-minute candle is like this. Okay. You only got 2 things to do. At least for after 10:35. You only got 2 things to do. Okay. Either one. Okay. So this bearish candle, which one is the opening? 1 or 2? Type in the chat box. 1 or 2. Which one is the opening? Okay. Opening is 1. All right. So this is the opening. Okay. Opening. All right. So let me erase. How to erase? Okay. This is the opening. Opening. All right. So you only got 2 possibilities. First possibility, it breaks towards the downside. Okay. It breaks towards the downside. So what you do is you go short here. Okay. You go short here. Now, second possibility, okay, second possibility is it goes up. Okay, it goes up instead of going down. So what you do is very simple. You go long when it touch the opening. You go long here, you go short here. If the opening candle is green, is bull, then it's the opposite. You go long when it break out toward the outside, towards the upside. You go short when it U-turn. Okay, when it U-turn. So reversal, you reverse to opening price. Continuation, you wait for breakout. Okay, continuation, you wait for breakout. Okay, so now I want to share a few examples. Okay, I want to share a few examples. Now, these examples was drafted as of I make the week. Yes, based on 5-minute chart. Okay, as of the week, I make the chart. Okay, and make the slide. Okay, now let's be very transparent. I show you the entire week. Okay, I show you the entire week. Okay, so the good and the bad, you see everything. So case study, 22nd of May. 22nd of May was 4 weeks ago. Okay, 4 weeks ago. So it was a Monday. Okay, first candle is 10:30. So again, this is a reversal or trend continuation. R or T. R or T. You have to wait the first 5-minute candle close. Okay, so your earliest entry is 10:35. Okay, reversal. Okay, so it's very obvious, right? It's very obvious, right? This one. Okay, so your entry is here because it's the opening. Okay, the opening 3400. Okay, 3400. Okay, and then your stop loss, once you enter 15 ticks down here. Okay, it didn't hit your stop loss. Okay, this one I put 12 only. Okay, maybe I drag it, it becomes 12. If you put 15, then it's even lower. Okay, and your target 15 ticks, it hits somewhere around here, which is before. Okay, during the before the morning session close. Or June say second candle no need close. Okay, no need close. First candle close, second candle onwards. Okay, you wait for reaction. Okay, wait for reaction. All right, whether it's a reversal or trend continuation. All right, no need to wait candle close. Okay, so far this example okay. If okay, types okay. If okay, types okay. This is Monday of the week. Okay, Monday of the week. 10:35 settle. Okay, 15 ticks. How much profit is that? 375 per contract. Okay, 375 per contract. Let's go to the next day. Okay, so this one again, it breaks towards the high of 3456. Okay, so you enter at 3457. Okay, 3457. Okay, and your stop loss is down here. Okay, the opening price is here. Okay, now this one is a rather complicated one because your long technically will hit your break even. Okay, your long trade will technically hit your break even. So if you want to counter back, you can go short when it breaks here. Breaks the opening. Okay, breaks the opening. All right, so your long, you might either hit stop loss or you break even. If you are monitoring your market, of course, you break even. If you're not, then you hit your stop loss. But if you're monitoring your market, you counter back. Okay, when it breaks the opening price, it becomes a big U-turn. Okay, it becomes a big U-turn. All right, so Nick asks, what's the winning rate? I don't want to tell you the winning rate because I tell you, I don't know whether you believe or not. Okay, why not you see it for yourself? It's not hard to back test because it is 1 day per trade. Okay, 1 day per trade. Okay, you can argue that from this example, okay, on the 22nd, the first one is win. Okay, 22nd, yeah. Now it's 23rd. One loss or break even, and the second one is a win. Okay, second one is a win. You can take profit 15 pips. Sorry, pips, ticks. Okay, easily. All right. So again, this one, a break even and a winning trade. All right. This is Wednesday. Okay, this is Wednesday. So again, this is 10:30. 10:30 is here. I mark it already. Okay, 10:30. You go short at 10:35. Okay, this is 3406. So you go short at 3405. Okay, 3405, and stop loss is here. Okay, 10 to 12. Okay, take profit at around this one. Can also be a break-even trade. Okay, can also be a break-even trade. Now, some of you might say, okay, why? Because there is a wick. Okay, there is a wick here. Okay, so it closed here. So meaning that the price maybe go up, go down like this. So the first 5 minute close here, and then some people said, what's inside this 5 minute candle? Okay, what's inside the 5 minute candle? So I let you see. This one is 1 minute candle. So the market did break out towards the downside. Okay, meaning that you go short here. If you don't take profit, then it goes back up. You break even. Okay, you break even. So this one is another break even. Okay, so next, this one, okay, is 25th. Okay, 25th, and then here 10:30 is here. Okay, 10:30, and then this one very obvious is a breakout. Okay, you buy at 3432, and your stop loss is down here. Okay, and I don't know how far you want to hold. Okay, I don't know how far you can hold or want to hold, but this one, okay, 15 ticks, 30 ticks, no problem. Okay, this kind of setup. Okay, now on the 25, you can also see that this one is 1 minute candle. Okay, so it really gives you a great breakout. You enter, set your stop loss. Okay, did not hit, go up again. Okay, this one, I show you the 1 minute candle is just to dissect what's inside the 5 minute candle because you are not trading during these days. So I dissect it for you. Okay, because 5 minute candle, a lot of things can happen inside. Okay, 5 minute. Okay, so you have to see 1 minute candles for your what? Okay, to have a better understanding. Okay, now I want to show you these 2 days. I want to show you these 2 days because these 2 days, when I prepared a chart, it was a couple of weeks ago. Now I want to show you these 2 days. Now these 2 days is really nice to trade. Okay, it's really nice to trade. So let's go to 5 minute 5 minute candles and let's go towards. Okay, here. This is today. Okay, this is today. Now, can someone tell me what setup is this? Reversal or trend continuation? R or T? Okay, usually my stop loss is 12. Okay, first take profit is 15. Are you sure T? T or R? Now, 10:30, the candle is bullish or bearish? It is bearish. Okay, so it is bearish. Okay, it is bearish. Again, this is the low. This is the high. Okay, bearish, it either break towards the downside, we go short, or it breaks the opening price, we go long. Okay, so if you go long right over here, your stop loss, let me just turn off the magnet first. Okay, your stop loss is 12. Okay, your target 15. You hit it here before 11. Okay, before 11. So again, this is the opportunity, the kind of opportunity you get, okay, in FCPO market. This one is reversal, okay, not trend continuation. This is reversal, right? Although it looks like trend continuation, but it's a reversal setup. It's a reversal setup. Okay, now let's go to yesterday, which is Monday. Okay, Monday. Now this one, of course, this one, 10:30, it gaps up and then it keeps going down, going down. Now, for high risk taker, I guarantee high risk taker, they will start selling already. High risk taker, they see it gaps up at the resistance and go down, you start selling. But what if you follow the strategy? Okay, you follow strategy. Okay, let's don't talk anything outside the strategy. Okay, here. Again, first candle, bearish. So either this is an opening, this is a, okay, you either go short when it goes down, okay, or when it breaks the opening, this is a bearish candle, okay? Either go down, you go short, or it goes up, you go long. Okay, now, here, tricky one. When it breaks, how does it, okay, react? Okay, here, at 10:35, how does it react? So we go to 10:35. I let you see what happened inside. Okay, it goes down, you go short. Go short, stop loss, 12, take profit, 15. Here. So your stop loss never get hit and you take profit 15. Okay, take profit 15. All right. So far, how many of you get the idea already? How does everything works? If you get the idea, type 666. Okay, if you get the idea, type 666. All right. So maybe, okay, I still have a little bit of time. I answer one question, how to identify T or R. Okay, how to identify T or R. Okay, I have to draw everything again. Okay, and also, I want to answer the question, why is there a gap down? Now, you don't have to ask why is there a gap down, because every day got gap. Okay, almost every day got gap. Now, why FCPO gap? Now, it gaps because it doesn't open 24 hours a day. That's the only reason. So when you don't open 24 hours a day, okay, we gotta understand that, okay, the price of FCPO is affected by a lot of things. It can be it is affected by, you know, your soybean oil price. Okay, it is affected by Dalian RBD palm oil price. Okay, our FCPO is not the only crude palm oil products in the world, and also soybean oil is a competitor for crude palm oil. So let's say if tonight, okay, when our FCPO closes, the soybean oil suddenly go up in price, okay, then the next day confirm the gap will be very big as well. Okay, so there are a lot of relationship, but we don't have to care about the gaps. Okay, we don't have to care about the gaps. We avoid the gaps. Conveniently, we avoid it by doing day trading. Okay, so when something don't trade 24 hours a day, that's how you get the gap lah. Okay, because when the market is closed, a lot of things happen. It's like why Apple gaps up the other day, for example. Okay, or because it released result, or because the market has something happen. All right, off the hours. All right, so now before I sign off, okay, maybe I will just use the most basic way to explain. The most basic way to explain, because I think a lot of you still got a bit blur. Okay, now, how do you identify reversal or trend continuation? Now, first scenario, okay, your first candle is a bullish candle. Okay, your first candle is a bullish candle. Okay, there might be shadow. If got shadow, you respect the shadow. Okay, you only got two options. First, you go long. Okay, first is you go long when it breaks the high. Second, you go short when it breaks the opening. Okay, either you go long when it breaks towards the upside, or you go short when it touch the opening price. So when you touch the opening price, this is what you call reversal. U-turn ma. Okay, when it breaks, is what I call trend continuation. Okay, second scenario. Second scenario. Okay, the first candle is a red one. Okay, let's say you have okay, you only got two scenarios here. Okay, first, opening price right now is here. Okay, opening price. Okay. How come I cannot change the color? Okay, opening price right now is here, and the low is here. So when it breaks towards the downside, this is trend continuation. Red ma, breaks again, then become more red. So trend continuation. If it comes down, go up, touch the opening price, this is a reversal. Is that clearer now? Okay, is that clearer now? If it is clearer, type clearer. Now, why trade only the third month? Okay, it's because third month is usually the most active month. Okay, you register a broker, you go into the platform, you see which month has the most volume. That's the answer. All right. Okay, that's the answer. Okay, so I believe right now it's clear. Okay, so place two pending orders at the same time. if you are fast enough, okay, if you are fast enough, okay, or even bracket order, if you can use third party uh, uh, platform to trade. Some allows you to do that. What if trade still open in third month? What do you mean by that? Okay, never mind. You day trade, you always pick the third month. Okay. When the third month change, then you know it's changed. Okay. Because after every 16, then the third month will roll over. Okay. We don't hold overnight. If you want to hold overnight, meaning that you want to position trade, then you have to deal with spread. Okay. Spread trading, meaning you have to sell off and then buy the next contract month, things along those lines. Okay. But if you're day trade, you conveniently avoid all these problems. Okay. So, all right. So that would be basically how, okay, you can trade all these things. Okay. So again, just to recap, okay, reversal is basically refer to U-turn and touch back the opening price. Okay. Reference is always the first 5-minute candle. Now, trend or momentum continuation is a breakout towards the high or the low, depending on what's the color of the first candle. All right. So again, go home and do back test. Okay, especially on 10:30. Okay, 10:30 a.m. All right. So that will be all for my sharing today, and I'll pass the session back to Shane. All right.
Thank you so much, Jinhao, for sharing with us how do we capitalize the opportunities in the derivative market with FCPO trading. And thank you for sharing with us the two strategies, which is the reversal strategy and also the trend continuation strategy in FCPO trading. So next up, I would like to call upon Ms. Yong Ko Lee, who is Assistant Vice President from Affin Huang Investment Bank, to share with you how can Affin Huang Investment Bank help you in futures trading and how you can participate in Derivative Virtual Trading Challenge, which is a risk-free trading environment for you to experiment your futures trading strategy. And at the same time, maybe stand in the running of winning some cash prizes from the challenge. All right. Ms. Yong, are you there?
Yep.
How are you today?
Everyone. Hi. Good.
Fantastic. All right.
Hi.
So good to have you here today with
Allow
us.
me to share my screen.
Yes.
Okay.
Perfect.
All right. Yeah. Hi, everyone. Yeah. My name is Colleen here, and thank you so much for spending a precious time with us today here. And I'm one of the dealer in futures desk, and I'm representing Affin Huang today to speak with you guys. Yep. So a little bit of disclaimer here. So whatever information that's being shared here are general purposes and for education purposes, and not any financial trading investment advices. Right. So basically, allow me to walk you guys through a little bit who we are, and I think most of you guys have heard about us. Okay. We are one of the leading investment banks, security trust group in Malaysia, founded in 1970. So Affin Huang currently offer like a wide services to full client spectrum here for corporate investment institutions, retail clients, high net worth individuals, and capital market counterparties. So throughout the 3 years here, Affin Huang has been #1 Asia Money Best Security House in Malaysia. So in 2018, we are the champion best overall participating in this organization in 2018. And 2020, we are #1 Bursa Malaysia Broker ranking traded value with 3 to 4.2 billion. So we would like to know more about Affin Huang, what we offer, like what kind of services and products that we offer. You can always visit our website at einvest.affinhuang.com. Okay, so for those who are not really familiarized with BMD products here, this is the overall products that is offered in BMD, which is quite wide range. Okay, it's not only FKLI and FCPO. So we are there are 4 categories, which is commodities, securities, equity, and financial. So basically, these are all the products that's being traded under BMD. And if you are interested in the products, you can reach out to us, or you can visit our website for more information regarding the products. So Affin Huang, we do have this Telegram channel. So feel free to join if you're client or non-client. Everyone's welcome to join. Okay, just scan the QR code or find us at Affin Huang IB Daily Boost. So here we share our marketing insight and of course including our daily commentaries. Then it's not only restricted to futures and also equity. So you are welcome to join us. Okay. And we currently having, like, if you're interested to join or open an account with us right now, we're having this promotion right now that we are offering low brokerage fees starting at 5, and you can just scan the QR code or just go now our web page, and it is 100% online processing. And if you want to know more information, you can just reach out to us, or you can go to our website. Okay, we are happy to assist you from there. So this is how our daily commentary looks like on futures. So we are not only cover locals, and we also covering foreign product as well, which is Capitalise, US stock index, FCPO, gold futures, COMEX gold, sorry, and crude oil as well. And we also include the world economic calendar and FKLI technical analysis and SCPO technical analysis. So if you join our Telegram channel, you will receive daily commentary like this every trading days. Okay, so if you're interested, you can just join and see what we think about the market trend of the day before the market starts. Right? So yeah, I think you guys are much more how to join this, right? So I think that I new here, I think newbie to future, I highly recommend to try out great opportunity for you guys. So the challenge period will start on the 1st August.
Coley, I think your voice is breaking out a little bit.
Oh, sorry. Is it? Okay, so
Yeah, now it's better.
Okay. So the challenge period will be on the 1st of August to the 30th of August. So the link below here, the bursamarketplace.com.tvtc, it will link you to the web page that how you're going to sign up yourself. So here is how is the step how to participate here, and it is very simple. Step 1 to step 6. Later on, I will guide you through later on. So in DVTC, you're allowed to trade 6 products, which is SCPO, FCPO, FGLD, FGLI, FM70, and F4GM. So during this challenge, right, you're able to trade more than one combination of the products. Okay, it's based on your comfort level, like which products you are more comfortable and more confident. Okay, it's not restricted to only one product. So trading futures is very important, to understand the contract specification. So just a brief of guide you through where to find the information of each products that you're interested in for their contract specification. So basically, you just go to Bursa website. Okay, on top there's a trade there. So you just click on trade and you click on derivative. There is a left-hand side, there's a lot of products, okay, under Bursa Malaysia, the BMD, sorry. So if you are interested in trading SCPO, so you click on SCPO, all the information that you require, all the information that you need regarding SCPO will be shown. Okay, you'll be shown, and if you still not understand, you can just reach out to us, and we are happily guide you through. Okay, this is where how you find the contract specs. Okay, and let me walk you through how to register yourself. Basically, it's very simple. Okay, you just fill out the information, okay, which is shown on your left side, just like a basic information that you have to fill up. Then you just register yourself, and you will receive an email like this. Okay, so it will show you the username. The username will be the ID for your login trading ID. Okay, and then bottom here they will be show you the web based, and if you consider to trade on web based, then you can click on the web one, or you more prefer like trade on the app based, then there is provided iOS and Android. Okay, so you will receive an email like this. Okay, so this is how it looks like on QST platform here, and this is the default mode. Okay, you will see once you log in first time. So it is pretty much customizable based on your own preference. So it can, as long as you already set up your setting here, okay, and then you can just save your outlook. Then every time you open, then it will be shown on your preferable outlook here. Okay. So next, this is how it looks like on the mobile side. QST mobile side is pretty much standard. Okay, you can see the code, okay, your position and your account, and of course the charts as well. Okay, and you can log in either mobile or web-based. Okay, if you are not convenient to trade, not using PC at the moment, you can just log into the application, the apps one to trade. Okay, so it's quite flexible. All right. So besides that, you will receive daily trading statement every day, okay, to show your cash movement, your what you've done, okay, what is the position that you carry forward, overnight position here. So like you can see also your account summary. So you will receive this on your email every day, okay. So the benefit of trading to join DBTC is you can experience the real-time trading, okay? Everything is so real except the 100K capital. Yeah. So I think like if you are very keen to, try on futures trading, but not yet confident yourself to, pump up the capital out yet, this is the great opportunity for you to start, okay? You can, use just now what you have learned just now, okay, from Junhao, and you can, try it out and sharpen your trading skills, your analytical skills, and identify the market trend, and try it out yourself to see the beauty of trading in futures, So speaking a little bit of experience, my last year experience here. So this is our second year. Affin Huang joined Bursa DBTC program. We have our ex-participants who join us as to select us as their mentor here. They are also newbie like you guys, okay? They are still fresh. They are very new to the trading in futures. Through DBTC, they're able to understand and get the feel about how the futures works and how they can identify the market. And now they are our clients. They are trading very comfortably with us at this until now. So I highly recommend you guys to try it out. You never know that maybe trading in futures can be your second income or side income, you can so call. Okay, so this is pretty much self-explanatory here, or the RM sign here, the prizes that you will win. So among the top 20 participants who achieve the highest account balance, okay, you win all the prizes that is listed here. So all this information that you are able to access in Bursa Marketplace website, okay, and if you want to have a look back, you can just go to the web page. Everything is there, okay. This is the prices here. So if you guys I recommend, if you guys are very much interested in trading in futures, I recommend it right now that you guys sign up yourself right now, because like it has a practice period of time for you guys before the challenge starts. So if you are interested in signing up yourself in DBTC, I recommend you guys to sign up yourself earlier, so you can get to practice what you have learned just now, okay, from Junhao, and try it out before the challenge starts. So but no worries, on the 1st of August your virtual capital will refresh back to 100K. Okay, everyone is given 100K for the capital. So anyway, yeah, this is our contact here. So myself and Ingri here will be on the day desk. We are here to assist you, okay? And if you are also open trading on the night 3+1 hours, Brendan and Casey is here if you need assistance and help, okay, during regarding to DBTC or regarding to product knowledge wise, okay, you can always reach out to us, WhatsApp us or call us. So hopefully that's all from me. Hopefully today webinar session allow you to acquire the knowledge that you seek, to bring you closer to the price, of course, and of the knowledge wise to build your confidence in knowing more about futures trading. Thank you very much.
Yes, thank you so much, Coley, for sharing with us how can Affin Huang helps you in kickstarting your futures trading journey. and how DVTC, which is Derivative Virtual Trading Challenge, can help you and can offer you a risk-free environment for you to test your trading strategy and get a sense of the trading futures trading market. So if any questions to ask any of our speakers, you may write your questions in the Q&A box and we'll address the questions in a short while. Don't write a question in the chat box here, write them in the Q&A box. All right, I think the first question is by Sim. I think it's addressed to Jin Hao. Okay, so in regards to your two strategies that you mentioned earlier, what should we do if the price doesn't reach our target profit or stop loss, like it fluctuates in between?
Okay, it will eventually hit either one. Okay, now I think what some of you might want to know is what if it is you know, sometimes it doesn't hit your stop loss, but it go up a bit, but it doesn't hit your like 15 ticks TP. Now usually I will set it to break even. Okay, when it go to the direction, when it goes to the direction, my direction, let's say if I go long and it goes up by 8 to 10 ticks already, I will move my break even to entry. Okay, so if anything doesn't go well, okay, it will hit my break even. Okay, so I don't lose money.
All right, thank you so much, Jin Hao. Now, Alvin has a clarifying question to ask. I think his question was why 25 times and earlier you mentioned 50 times. I think it refers to FCPO contract size.
FCPO
right?
is, I think it's, I'm not sure if I accidentally mentioned anything times 50. Okay,
But it's 25.
FCPO is
definitely
time 25. Yeah,
because one contract size consists of 25 metric tons.
Yeah, and also your difference in terms of ticks, you times 25, you get the value that of your P&L.
All right. Ng would like to ask, for trend continuation, should we place, how many ticks should we place that is away from the high or low of the week?
1 tick. Break by 1 tick, enter.
Okay, just 1 tick away from the high and the low.
Don't touch, you enter lah. Opening price, touch, you can enter.
So wait until the candle closes, then the next minute, 1 tick
No need. Only the first 5-minute candle you have to wait. For trend continuation, the second M5 can be still, 5-minute candle can be still moving. But once it breaks the high or breaks the low, you can start entering. But you have to see the first candle color. Okay, if you track trend continuation, if the first candle is green, then your trend continuation should be breaking the high. Then you go long. If it is bearish, okay, if it is bearish, then you have to wait it close. It breaks below the low of that bearish candle. Break by 1 tick, you go short. Now, I'm surprised that none of you asked, what if it is a doji? Okay, so if it is a doji, okay, if it is doji, it depends on the situation. I would say this one is quite subjective. If the doji is small, okay, if the doji is small, I will use the high and low, meaning that no opening price. Okay, high and low. If it breaks upward, I go long. If it breaks down, I go short. Now, if sometimes the doji can be having long wick, okay, it's like open at 3,000, go up 20, go down also 20, then go back up close there. In this situation, I will wait another 5-minute candle to close. But very rare. I only met 2 times. Okay, I only met 2 times. Okay, usually it will give you, it wouldn't be a perfect doji. Okay, yeah.
All right. I was thinking doji, then we save the bullet for another day. For another
also
day, right?
can. Okay, also can. Like
All right.
sometimes if the first 5 minutes it goes like a doji, stupid doji lah. It's like
Okay.
it goes down, then goes up, then the upper lower wicks like it's like the first candle range is already like 80 ticks, then sometimes when trust your instinct, when that situation is too rare and it doesn't make you feel comfortable to trade, trust it. Trust your instinct. Just don't trade for that. It's going to be fine.
All right. Trust your instinct.
Uh.
I would like to address the next questions to Coley. Is there any tutorial to learn about the QST trading platform?
Currently, like for DBTC, yes, you do have. You just sign up for the DBTC, and you are able to log into the trading platform, and you can start, practice from there. Okay, specifically for DBTC, yes.
All right. The next clarifying question is: do we need to fund the account of the DBTC?
I don't get the question. Means funds like.
Yeah, I think the DVTC challenge. The answer I think no need lah, because every
you don't have to fund anything. Okay,
it's free.
100K is free for you to trade. 100K.
One time free. Okay, if you
no.
finish
You
that,
can trade prior the challenge. Okay, it's already 100K inside. Once you register, the capital is there, so you can start practicing. Okay, so plus minus, on the first day of 1st August, the challenge started. You'll refresh back to 100K. So no worries. So this time is a good time for you guys to practice. Yeah.
Yes, that's right. It's a rare opportunity for you to participate in this, because Bursa Malaysia Derivatives invested a lot of money to build this platform.
Yes,
so
yes, of course.
Take advantage of this trading period from 1st August to the last day of August.
Yep.
Do you have an estimate, how was the performance of the past year winners? That was a question by Faisal.
The performance last year, there are winners from our side. Okay, they actually earned 2 times of the money.
2 times.
Yes.
That means
like for the overall capital, the capital.
They grew 100K account equity to 300K lah.
Yeah, 300. Yeah.
300K lah. So that was the winner.
Yeah.
Which placing were they?
Sorry?
Are they? Which placing were they? Were they like top 5, or they were from 11th place to the 20th place?
We got one winner is 2nd place.
2nd place lah. 2nd place.
Yeah, she trade FCPO.
She trade FCPO.
Yeah, she trade. Yeah.
Incredible. That's why Jin Hao talk about SCPO today.
That's the best thing for high frequency trading in Malaysia. Best thing.
Yeah, you need the volatility to support that.
Yeah, because the FCPO is the worst benchmark when it comes to the crude palm oil futures contract.
Yeah.
The next question is addressed to Jin Hao. It is by Yusuf. Normally, do you use stop order entry or market order?
Okay. For this, it depends on how comfortable or how fast you can execute your trade. Okay, it depends on how fast you execute your trade, and also you have to be very familiar with the platform that you trade, that you are using, because different platforms, they offer different execution. Just now, when Coley shared the QST, there is one thing called ladder. I don't know whether is it ladder. You have the price, like every layer you have the price. Okay, so when the market price is here, you press, let's say when the market price is like 3,000. When you press the buying side, anything less than 3,000 will become a limit order. Okay, anything at the selling side, it will become a limit sell. Okay, and when you, let's say if the price is 3,000 and you press anything, okay, at 3,000 and anything above 3,000, let's say 3,005, okay, it will become a stop order. I believe there is, for most platforms out there, that has the ladder function. They will have this kind of functionality or things along this line. Am I right, Coley, for QST?
Yes, correct. Do they have?
Yeah.
Yes.
So you need to be very familiar with the platform. Okay, so if you are doing real trading, okay, please, okay, please, if you're not familiar with the platform, ask your broker. Ask your broker to assist you because you pay the broker fee anyway. Ask them. Okay, that's their job to teach you, to guide you. Okay, because every platform is going to be different. Okay, I've never really familiarized myself with QST, so I'm not sure. But when I look at the ladder, that will be more or less the function. Okay, so familiarize with it. Okay, if you want to use market order, okay, it's up to you as well. Okay, but if market order, sometimes there will be slippage. Okay, sometimes we go, spike too much. Okay, so it depends on how comfortable you are to use stop limit or limit. Okay, depends. Okay, if you want fast execution, guaranteed execution, of course, market order is the best. All right. So again, for day trading, the most important thing is you're going to be familiarized with the platform. So your workstation has to be very, you need to know what's inside a workstation. You have your hybrid ticket order or the ladder, and then you have your chart. Okay, set it to 5-minute candle and things like that. All right. So yeah, that's the thing that I can share. If you're going to be very fast and you're going to understand your workstation very well and also the platform.
All right. The next question is by Faisal. Could you share with us what is the relationship between the FCPO and the soybean oil futures contract?
At the most generic level, they are correlated because at the industrial usage, okay, they are quite similar. They are quite similar. So imagine today, soybean oil price go up. So if you are the consumer or you're a factory that want to use a soybean, for example, then when soybean become more expensive, then you buy FCPO lah. Then the demand for FCPO, the crude palm oil will go up, then FCPO price will go up. Okay, so if let's say overnight, your soybean oil price go up, then you expect a gap up tomorrow. But of course, don't go and predict the gap. Okay, don't go and predict the gap. Sometimes it will give you some surprise as well. But at the most generic level, they are correlated in this manner. And also, you have the RBD palm oil in the Dalian one. Okay, so they are, different crude palm oil products and also, competitors of crude palm oil. Okay, they all will affect. Okay, they all will affect the price of FCPO.
Yep. So they are mostly positively correlated because they are both edible oils, and the FCPO market is also open right now until 11:30. This is for the night desk.
Yeah. And there is one thing that I might want to add. Okay, now 12:30 FCPO price the market will close. Now I usually, if you are day trading, if I don't have like 15 or 20 ticks unrealized gain, I wouldn't hold past morning session. Okay, the reason is because let's say if there is any news in between 12:30 to 2:30, like suddenly no need FCPO suddenly okay, something happened over the west. Okay, something happened to the price of soybean oil. You will see a gap later in the afternoon session as well. So if you don't have enough cushion, when I say cushion, it means unrealized gain. If you don't have enough unrealized gain, don't hold over afternoon session. Okay, close it at 12:29. Okay.
All right.
All right.
Thanks for sharing the tips. The next question is by Bong Kam Tin. I think this is addressed to Collie. How much is the minimum capital to trade FCPO that we need to have with the broker?
Basically, it depends on which contract that you are preferable, what kind of products. Okay, they always have their own margin requirement. So there's various. So like for example, just now like Junhao shared that in order to trade FCPO, you require 9K as a margin requirement. Of course, we do recommend you to just top up, deposit in just nice for the margin requirement because the market fluctuates, right? So you need a little bit more, like 10 to 20% of the margin requirement for you to, buffer in case the market fluctuates or against your position. Yeah.
Yep, it's important to note that the margin requirements changes according to the Bursa Malaysia
Yes.
Clearinghouse.
Yes,
Yeah,
correct.
yeah. So if the margin is 9,000, like what Kohli said, right, you don't just keep 9,000, you know, because you need to have buffer. All right,
Yes,
because
yes,
if you
yes.
move a bit against you, then you gonna margin call
Good,
already. So
yeah.
that's what Kohli was saying.
Yes.
The next question, Kohli, can we do spread trading in DVTC?
Yes, you do. You are allowed to.
Okay, so you can do spread trading, huh?
Yep, yep.
Calendar spread. How about inter-commodity spread like FCPO and FCPO?
That is not mistaken. It's not there. Yeah, it's not provided in DVTC.
So it's only within the same
Within
commodity, intra-commodity between
Yes, correct.
FCPO, calendar spread, and yeah.
Yes, correct.
Okay. Looks like we're coming to the end. Let's do one last question by Edward Taufik. You know, he wants to address to both speakers. So considering the world's largest CPO producer, how serious or how important is the CPO market in Indonesia in affecting the FCPO prices? So Jinhao, what do you think?
Okay lah. If you ask me fundamental, then you ask the wrong person.
Oh.
Okay, but at the most generic level, okay, a lot of people said there might be, you know, politics lah, affecting lah. Okay, last time some people even said like what conspiracy theory lah. Okay, to me, okay, the fact is, FCPO, okay, the crude palm oil for our country, to a lot of people, it is like one of, if it is not the best, it is one of the best, and we really rely on that. Okay, so whether or not Indonesia and all these things will affect, I think this at the fundamental level. Okay, at a fundamental level, at a macro level, we need to look at you know, a larger market. Okay, larger market, like how would it affect? Okay, usually I don't care about Indonesia because either way I'm not going to trade it. Okay, the only thing I care is soybean and FCPO because I'm a trader. Okay, so that's the most important thing to me. Okay, so whether or not those you know, political issues or you know, overseas threats like those from Indonesia, okay, to me it is not important as a trader, because if it is bad, I don't care. If the price goes down, I go short. If the price go up, I go long. Okay, so to me, I don't really bother that much. So my focus would more towards soybean versus our CPO as a whole. Yeah, that's my opinion. But anyway, I'm not a FA guy when it comes to all this trading stuff, because it's just trade. Okay, I only trade for 10 minutes a day. Why? I don't really have to understand all those things. Okay, that's just my perspective. All right.
Understand that. How about Kohli?
I kind of agree with Jen Hao here. So if you're a trader here, so like the political impact is not much, okay, because you can sell first, buy later. No matter the market, you can just play around with your strategy here. So like I think more importantly, it affects all those like industry players. Crude palm oil industry players are more worried compared to traders, in my personal opinion. Yeah.
All right. Thank you so much to both speakers. So
here I would like to just now you mentioned Shane, you just now mentioned asking a question regarding that. Can you like trade FCPO and FCPO?
Sorry, I couldn't hear you right now.
You was asking a question just now regarding to if you want to trade spread with FCPO and FCPO. Actually, they do have. I'm so sorry, that is my mistake.
Oh, you mean the FCPO and the FCPO?
Yes, correct. Yes, correct.
Okay.
Yeah, that's my mistake. They do have. Yes.
Okay. Yeah, correction. There
Yeah,
is
my bad.
FCPO and FCPO spread contracts available during in the DVTC. Right. So thank you so much to both speakers. So ladies and gentlemen, you just heard from Mr. Bong Jinhao, who is the founder and chief master trainer of Street Finance, and also Ms. Yong Kohli, who is the assistant vice president of Affin Investment Bank. So if you decide to join DVTC, remember to pick Affin Huang as your preferred broker. All right. So with that, we have come to the end of this session. Hope to see you all in DVTC. All right. So bye, everybody.
Thank you. Bye.
Bye.